High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. MasterTheMarkets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, welcome to our live trading workshop today. We got a lot in store for you today, so just a very quick update on what we are going to be showing you today. One, as we usually do, is our live trade updates and potential trades. Our topic for today, which is going to be on momentum, just like what you saw on the screen just now. And finally, if there's any questions and answers, we will take them live. My name is Steven Alpan from the MasterTheMarkets Trades Conference and the Traders Open Days. So without further ado, let's go on, traders, to the live trading workshop session for today. So I'm actually taking a look at euro dollar at the moment. Now, why am I taking a look at that? Now, before I come to that, I tell you specifically what I'm taking a look at. I'm taking a look on the 15-minute time frame, right, over here. And all I'm looking for is a top confirmation, okay, with an orange dot, which what we got according to the SMI over here, the smart money indicator, along with the VSA, the volume spread analysis indicator, which has been designed by Trade Guider and the team, okay, headed by Gavin Holmes and his team. Now, over here, why do we partner on such things with the price and the volume? Because it's so obvious, isn't it? When price action and volume indicators, which is what we got, the smart money indicator and the VSA indicator, then it becomes very powerful, right? We've explained this on previous videos, which you can always take a look at. Now, in terms of this, why have we come to the conclusion on taking a look at euro dollar and waiting patiently for that in terms of the potential trade setups? Because one thing is we got the trend alignment tables over here, okay? In terms of the trend alignment tables, which I've spoken about before on the previous videos, what it's telling you here is that on the euro dollar, if you take a look, on the daily time frame, it's actually an uptrend phase 2, okay? So if I just minimize that for now, you can see over here. So you see this uptrend phase 2, according to the trend box. And even when you were to draw this up as well, you can see higher highs and higher lows, and then it's a phase 2. Now, you see, to say it quantitatively so that we don't say it subjectively, that's why you have to quantify what the tops and bottoms are, okay? That's what we have done over here, traders, and that's why you need the smart money indicator framework, okay, so that we go on a systematic manner of methodologically quantifying our tops and bottoms, and therefore pulling out the 4 important stats. I've talked about all this before, but the first one is the trend and the phase, okay? That's what we're doing here. Now, for most of you, I know I'm getting a few comments over here on our different platforms over here, saying that, I'm not sure about this uptrend phase 2, this top and bottom, it's a bit over my head. For some of you who are joining us for the first time or have not really heard of this kind of way of looking at market structure, highly recommend you guys to go to our YouTube channel, right? youtube.com/MasterTheMarkets. And over there, what I would suggest is definitely to take a look at our must-watch videos, but the one main important one would be the stretch principle, okay, which is based on another strategy as well, but I'll tell you, but it's very powerful. That one you can watch. And also, please do take a look at our 7 steps to CTP video series as well. Now, when you take a look at this, when you join us for our future live sessions, this will make much more sense, okay? So I would highly recommend that. Once you put your name, email, then you will see the 7 videos just like this, okay? Right, now coming back into here, that's just to answer the question that just came in. Usually we always get that. Now, when I then go on to my 4 hour time frame, if you take a look over here, on my 4 hour time frame traders, you can see that over here, this is a downtrend phase 1 at the moment. Okay, downtrend phase 1. So that's what I've written over here on the trend alignment tables over here. So downtrend phase 1. So like that, we keep collecting it for each and every time frame. Okay. So then if I then drop it down then to the 1 hour, then you can see over here on the 1 hour, we can see that over here, it has taken out, let me just wait for it to populate. So you can see it's uptrend, it's downtrend, sorry, downtrend. It took out the last low, right? Lower lows, right? And then now it's retracing. The blue dot just confirmed. Perfect. Kind of set up what we need over here. So that's what we then did on the table. We collect all of that. And then on the 15-minute, as you can see over here, then we can see that that is a, actually there's a downtrend and that's a phase 2 over there. With a little bit of a volume spike over here, as you can see. Okay. Right. So now, when I put it all onto this table, you can start to see that over here, you see the daily is an uptrend phase 2, all right? Okay, top to bottom, all right? Still in the downward direction. Just gotta be careful of the trend. The 4 hour is in a downtrend phase 1 as we saw, right? Just like that, and everything else is following on same, okay? So the lower time frames are aligning in terms of the trend and the phase, so therefore direction alignment with trend alignment, and with the daily is just aligning in terms of direction only. And in terms of the stretch, which is what I told you to look at in the previous videos on the YouTube, if you take a look on my other chart, which I got the stretch indicator uploaded, which will be, we got to get it over on the trading view as well, you can see that it's taken out this lower stretch line, okay? And that's what we got over here. And that's what I have also put into here as well, okay? So that's very good to do. They're all aligning. And then as it formed this range for today, no, the 0.8 ATR, and there's a bias, is quite strong. The bias is for the short side. Now, there's two ways which we can take this particular now trade. Now we're going into entries and targets and all that. That's in terms of the strategy, right? So in terms of that, which is what I'll be covering in our topic very shortly as well, just after I explain this, over here, what we can see is, in terms of entry and all that, what I will wait for is I'll wait for the top and another opposite dot to confirm on the upside. Okay, I want to wait for the top arrow to come up. That's what I'm looking for. Now, once I get that, then what I will do then, I will take an entry, stop loss, and target based on an open equity distance. So now, what am I meaning by that? So if I go back to here, so let me just show you this over here. So when we get the orange arrow and the orange dot appearing on the 15-minute, on one strategy, what I can start to do is I can put an entry here. Let's say it just confirms around here. Entry, we usually put blue. I've done this before as well. And then after that, the stop over here, right? And then after that, the target, let's say on the entry here, I will take a look at my ATR number. Let me just put the ATR indicator here as well. There we go. We got the favorites over there. And let me just do that. I'll just use a simple one. Let's do an SMA. I'll do 10. And we should be good to go. And on that, what I can start to take a look at, I can read off here. On this one here is roughly about 6, isn't it? Right? 6 pips. If I go back to here, I can just take a look as well and look at over here. Let me see this one here. On here would be 6 as well, it's saying, isn't it? So all I'm saying is, if I go back to here again, from here, I know that it's got a 50, 60, 70% chance of getting to, because it's a phase one as well. When this confirms, it's in alignment with the trend, downtrend, on the 15-minute time frame. I've aligned all the time frames. Then I'm taking a specific entry on the 15-minute. And over here, then I can do a 6-pip target. Okay, that's what I can do over here. So let's say that was the entry over there, wasn't it? 0427. So 0421 is what I'll be taking a look at. Okay. Right. So that's how we would place the entry and the stop loss. So this one would be the stop loss there. Okay. But only when it confirms. So I need an orange dot, right? And I need the orange arrow to come up. They'll come up at the same time. Once I get that, then I put an entry over here, stop loss and target for 6 pips from there. Okay. But until and when I get that orange dot, I cannot put the trade. Okay. That's what I was reflecting on before I got onto the session as well, because there's always a battle, isn't it, traders, right? Between waiting and the fear of missing out as well. Okay. If I were to take a look at over here, so let me just take a look at this one here. So let me run gold over here at the moment. Let me see. Let me bring up gold. Right. So gold at the moment. Now, if I were to just show you on here before that populates there, you see, now we have put all the alignment tables all together, right? So I did the same thing what I did with the euro dollar, yeah? So on the daily, it's uptrend phase one, and then on the 4 hour, and then it is uptrend phase one again as well. So just like that, that's what we have aligned over here on the gold chart over here, okay? So uptrend phase one, so uptrend phase one, and then we did uptrend phase two over here on the 1 hour, uptrend phase two over here as well. Upper stretch has been taken out. Bias is towards the long side. But this is what I want you to observe, okay? Now, however, on the daily time frame, if you take a look over here, now let me go back to here. If you take a look at the daily time frame here, look at that, right? The last time it got confirmed was here. So if I were to draw the line, confirmation came here, this is where the bottom is. Immediately you can say this is, you can see that this is overstretched, isn't it, right? Or in other words, open equity, open profit to the upside is very low, right? Anything that's overextended for so long, because price cannot move in a straight line forever, it will start to make a top very soon. Okay, so if you think about this whole structure, it's very logical, right? So we just got to be aware of that when we take a lower time frame trade. Okay, this is on anything that you want to trade on. The principles are the same. Okay, so this is why when we go on to the gold on the lower time frame, you see before I came onto here, I did see that on the 15-minute there was a trade to take, okay, towards a 1 ATR level. But however, okay, because of this, that there was a low open equity here on this daily, what you can do is, what we usually will do is that we will take the trade, but with a lower risk, okay, with a lower risk. That's what you can do. Or you can step away from even taking the trade, even taking, rather than a full position of, let's say, 1 or 2%, divided by 4, take about 0.25, okay, or 0.5 if you're doing a 2% full risk on every trade. So that's what you can do on terms of trades like that. Or you can have in your rules saying that, you know, on trades which you have low open equity on a higher time frame, I won't take a trade at all. Okay, so that's what you can do. That's on gold. So in terms of higher probabilities for today, I was taking a look at Brent actually. And Brent is towards the bias of uptrend, towards the upside. If you take a look over here, so let me do that. And I'll take a look on the VSA as well. in terms of where the probabilities are as terms of the volume as well. So if you take a look, what I was waiting for over here is waiting for the top to confirm before I take uh, and the bottom then to take towards the upside. However, we didn't get that confirmation of the top. And that's what I said, right? Of a balance between patience of your setup and the fear of missing out. In this instance, it's just keep going up. What we can do actually, traders, is that we can wait and see if later on the line, then it will confirm its top, and then we wait for a bottom. Taking that for the ATR target for first strategy. Now, on the other strategy, which I've talked about, in terms of strategy number 2, if you want to call it, is towards the stretch principle, right? So this is towards it making a range. Let's see, yesterday's range was 132. So 0.8 times 132, wasn't it? What would that be? So let me just quickly bring out the calculator. So those of you who are much more faster than the calculator, you can always put that into the chat box. So 0.8 times 1.32, you can see 1.05. Has it done its range? No, it's 87 cents only right now. So the range is still there to be covered, but then we take at specific points where we will take that particular position over there. Over here, it did take out the range over here. So I was looking at it. I mean, we didn't really get a full setup over here today to actually enter it, unless you were there much more earlier in the morning, okay? At about 8 o'clock our time, we didn't really get that. The range breakout actually happened around here at about 9 a.m., isn't it? Just about our time. That's the only point which you could have come in around over here if you were taking a look at stretch principle trades, okay? And then the stop loss would have been over here on the second strategy towards the trend, and then you'll be taking that towards the ATR range, okay? The ATR range, as I said, 0.8 of that, 1.05, $1.05, where would that be? I will show you. So $1.05 would be here, 76.51, okay? 76.51. There, that where it will be for today for the stretch principle strategy, okay? Remember there are two types of strategies, isn't it? One is the stretch principle strategy, and then the other one which is just running it on a 15-minute time frame towards a OE based strategy, okay? So these are the two things that you can take a look at. The 15-minute one is a very short term strategy. Last week when we did that, actually you saw that silver and Brent actually hit their first targets, right? You can see all of that, as I said, you can see all of that on our YouTube channel. Okay, if you go on the live, and you can see it all over there, right? So you can see over here, the last one where we did successful strategies for commodity trading. Over there, you would have seen that we called out the Brent and silver, and both of them hit the target. And then the before ones, you can also take a look at the trend alignment tables also. There you go, trend alignment tables. You can take a look at that, and that will make a bit much more sense for you guys as well. Okay, right. So all that is there. Some of you also mentioned that you're not getting the notifications to your phone. Now, the way to do it is, which what I learned later on, after you hit the subscribe button, right, you hit the all bell icon. That is when the YouTube will send you notifications to your phone as well, so that you know, oh, you're going live. Let's see what Master the Market is looking at in terms of the trades, along with the VSA and the trade guiders, indicators, and everything. Now, a quick peek at Brent oil over here. Now, I just want to take a look at in terms of the 15-minute over here. And after that, I want to take a look at the topic for today, isn't it? You know, running a little bit out of time, going into the US session as well. So if you take a look, this is perfect over here on Brent. And we do get a setup and a top confirms on the 15-minute. If you take a look, right, so it's also the green, we get a green positive one on the VSA light, uptrend phase one as well. And then over here, volume spikes also. So perfect. Very good scenario that we are having. Now, if you did want to get some other setups on the 5 minute, you can do the same thing, which I've got clients doing on 3 minute and 6 minute as well. What you can do is the same thing over here. So with the SMI, once the blue dot comes, then you can take the 1 ATR. So you see the 1 ATR number here, 58%, but for phase ones, usually we're 70%. So what you can then do is from the close price, right? When you take a look at the ATR over here, so this one is telling you about 9 cents. Okay, so if I were to just do that, let me just do that very quickly. So this one is 10, and then this one is SMA, and there we go. And then over there, you can see this is about 10 cents, what we are getting over here. That is doing. Let me just quickly just check that. Yeah, 10 cents. So from here, if you want to do the same thing on the 5 minute, as long as all the trend is aligning, then you can do that, right? You can do about 10 cents over here, and then you would have just hit this target on the last bar. So many ways, but write down your rules and take it accordingly, okay? How you want to trade it. On the 15 minute, if you want to do it, then just wait for a top to confirm before we take that particular trade. Now, that's enough said on all of that. I guess you guys are getting the hang of it. For today, I think we are mainly taking a look at the euro dollar trade, wasn't it, right? So we'll wait and see how that plans out. There we go, guys. Somebody is definitely listening to us. We got a confirmation. Now we can put this trade now live. And I'll close on that bar here, right? Close on that bar over here. And the close is going to be 1.0429, right? So let me just do that exactly. 1.0429. This is a really good trade over here. And then after that, then we got the high 1.0434. I will take that as 435 because of the 9, the micro digit, and then 67. So 437, isn't it? 1.0437 with all spreads and all that counted for. So then we go. Let me see, 1.04437. That's right, yeah. I'm taking it at 1.0, no, I think I've got 1.0435. So I'm giving it 1 pip leeway plus 1 pip. So yeah, that would be fine over there. And then the next thing that we will then look at is for the target. The target will be, as I said, the close price, 1.0429, isn't it? Is what we're having. And then the close, from the close, we take the 6 pip target, right? So 1.0429 minus 6, 1.0423 is what I'll be having. And there we go, traders. And that's all our trades set in at the moment, okay? So that's our entry, that's our target, and that's our stop loss. Now, some people might usually will say is, Tiro, it looks like it's a little bit less than even 1-to-1. Is that even worth it? But remember, as I mentioned in the previous videos, why we put the initial stop loss this bit far away and not so tight is to give it room to dance, okay? And in other words, we're giving it room for the volatility. What you really need to focus on is what eventually happens, because remember, when this trade hits the target, right, that risk is disappeared, okay? That is why you need to focus on the actual reward to risk ratio, okay? What actually happens in your strategy. So, you might keep putting your stop loss a bit far off, but your actual loss might only be about 0.5% average. And your average win might be 1%. It keeps hitting the target. So actually you got a 2-to-1 actual reward to risk ratio, when initially you may start off with just 1-to-1 expected reward to risk ratio. This is very, very important, traders. I mean, a lot of people are not even mentioning all of this, right? Good. So you got all of that. Now remember that, traders, just now you did see that bar going up against you as well. All that. Don't get fearful of that. That's the dance that it does. Just let it go. Have faith in your numbers. But to do that, your intellectual understanding of why we are doing all this must be very clear. That's why we got all the open equity data and all of that, which what I showed you before. Yeah. And we got also the VSA light with the volume all confirmed over here. Now, all of these concepts and everything you can find at 7 Steps to CTP. This is very important, right? So this will give you the understanding of the framework the best part is it's not rigid. You can apply this to anything, any kind of strategy that you are currently doing. Okay, right. I think with that said, today we will go on to the topic, isn't it? What's the topic? The topic is momentum, right? Is momentum is what we are looking at. So let me just see if I can. Maybe I'll do it on the over here. Right. So right. So one of the things that we can take a look at, traders, in terms of momentum. Now, firstly, what is the definition of momentum, right? Trading using momentum, isn't it? Now, what is the definition of momentum? Quantitative way, a momentum definition means close of the current bar, okay? Let's say this bar hasn't closed yet, right? So the close of the current bar, which is here, minus the close of the N bar, okay? Now you have to define what the N bar is. So is the N bar just the bar before? So the N is just 1, right? N minus 1, okay? Current minus 1. You can see that this one is just C again. C minus 1, current bar minus 1, or current bar minus 5. So what do you actually want to do? Or is it the current swing bar? Is it? Is that how you define the N? Now that is how you define momentum. Okay. Now, as you see, there are a lot of momentum oscillators, isn't it? One of the famous ones is a stochastic or the RSI. They're all really based on that. Close of current bar minus the close of the N bar. Then you get a formula from there, and then you then extend the formula to get then the range bound oscillator, which you can then use as trade signals. Okay. So in this case at the moment, if you take a look, now the momentum has increased towards the downside, isn't it? Because this close of this bar is quite far off from the last bar, from this up bar. It's come down the momentum. Okay. Now another way to measure the momentum, at least rather than within few bars, between bar to bar, another way to measure momentum is through trend as well. So you can see once it's in a phase one, as you can see over here, the 15-minute time frame, then the trend, the momentum is towards the downside because now you got a trend alignment with the phase as well. Okay, because this phase is in alignment with the trend. This phase here is the counter trend, this one here, right? The bottom to top move. Okay, right? And then after that, it reverts back to phase one and we'll keep doing it, right? Phase two, phase one, phase two, phase one, right? That's what we are looking for. So we usually want to be trading with in line with the momentum of the trend, and that's what we are looking at in terms of the phase ones. Okay, and then once we align that with all the higher time frames, the probability of a trade goes up. And this is why we do this, right? This is another way of also measuring the momentum when you go deeper in through all the higher time frames. Okay, we are aligning all of that along with the range for the day that needs to be formed. So it becomes very powerful, very logical as well. You're trading all alignment with logic. So that's how then you get more stronger probability trades. Okay, so momentum, as you can see, it can be done in three ways, right? So I'll let you guys reflect on this and also how you want to incorporate this into your strategy as well. So first thing, momentum can be done by the equation close minus close of N bar. Second thing also you can do is in trend and phases. But again, for doing that, make sure you have some kind of quantification of the tops and bottoms. Again, we're going to be talking about this framework and everything in the Society of Technical Analysis. We've been invited to come and lecture for their Part 3 diploma students as well. And then after that, then you can then also take a look at higher time frames and align your momentum together. And that's how then you get a strong framework and signals, and also your edge for your strategy increases as well. So anyway, traders, I guess that's that one for today. That's what we got, and that's how we got the euro dollar trade as well. We'll monitor and see how this goes. This is still going a little bit against us, but we'll wait and see how that goes on. And I'll also update that onto the Master the Markets channel as well. Okay, and we'll see how that trade goes. You can also follow us on TradingView Master the Markets 2010. And in terms of questions and all that, what are the questions that we are currently getting at the moment? They say are these the only instruments that you guys take a look at, or are there far more? We actually take a look at far more instruments, but of course, because of the time, then we just take a look at usually these 5 instruments that I've shown you. You can apply this on anything really, isn't it? Currencies, commodities, indexes, it doesn't really matter. Okay, you can do this. These are cross-transferable principles that you can apply on any kind of time frame. Okay. All right, traders, I guess with that said, just a last reminder, 7 steps to CTP, do get that. Then you can also then take a look at that at your own free time. Once you put your name, email, and number, then you can then take a look at the 7 videos at your own free time. Okay. All right, traders, I guess that's pretty much that for me on this live trading workshop session. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.